Hello guys, in this video I am going to be talking about the first strategy. I call it the volume clusters. You can trade this just with the order flow, nothing else is needed. It is a standalone strategy. I prefer to use this strategy on 5-minute charts and also on 30-minute charts. The preferred pair or the preferred trading instrument which I use for this strategy is the futures for the euro or other major pairs, but you can also trade it, for example, with the ES, which is futures for SP 500, or with the oil or gold, whatever trading instrument you like. I prefer trading it on the euro, and it is one of my favorite standalone order flow strategies. So let's have a look at it. The first thing you need to do is set up your chart so it looks like mine. Only thing you need to change is the cell content. So you click it and you change it so it shows volumes, alright? So not bid and ask, but volume. When you turn on this visual option, it will look like this. And every cell will show how many volumes got accumulated and traded at the given price. Now the reason I use this volume setting is, as you can see, the heavier the volumes, the darker the gray is, like in here or in here. Alright, the heavier volumes, the darker it gets. And this is the core of the strategy, because you want to follow the dark places, the places where the volumes are heavy. Those are the volume clusters. Now, those volume clusters work as a support and resistance zones. What you want to see is price moving away from those support and resistance zones and then testing them again. And best is to have a whole candle above or below it. So in this video I'm going to be talking about two scenarios. One is a trend scenario and the other one is a rejection scenario. So we'll start with the trend scenario. If you look at the picture, then there is an uptrend, strong buying activity, especially those two 30-minute candles. And within this trend, within this uptrend, there was a significant volume cluster created in here. You can tell that the volumes were heavy because the color got darker in here in this volume cluster. All right, so this is what you want to see. And then you want to see the price move away from it. So the price goes higher, and best is to have a whole candle above it. In this case, this is an uptrend, so you want to see a whole candle above it, above this area. In this case, we have two candles, this one and this one. The whole candle, the body and the wick are above this support zone. And now we are waiting for a pullback. You are waiting for the price to make it back to this level. And when it does, you enter a long trade from there. The reasoning behind that, behind this setup, is that the buyers are pushing upwards and they were adding to their buying positions. You can see that in here, heavy volumes in here. Now you don't really need to read those numbers. You only need to look for dark shades. Alright, that's it. So you see heavy volumes in here, then the price continues upwards, and when there's a pullback, those buyers who are adding to their buying positions should be defending those buying positions, and they'll try and push the price upwards from this level again, from this area where they placed most of their volumes. Alright, that's the whole logic behind this setup. You always want to see heavy volume cluster, then price move away from it, and then retest this zone. This is when you enter a trade. Right? Now, let me go through some examples. This chart is a Euro futures, 5-minute chart. There was a downtrend. This was actually yesterday. And within this downtrend, there was a significant volume cluster in here. There was actually another setup, which I'm going to be talking later, double knot setup. but I'll mention that later in another video. But in this case, you can also see that the color, the shade got darker, which means that the volumes were way heavier in here in this area. So you wait for pullback to this area again, and this is where you place your short. You can place the short either at the place where the volume cluster begins, so short from here, or from the place where the volumes were the heaviest in the volume cluster, which is in here. Either way works. All right, now let's move on into another example. This is also futures on the euro 5-minute chart. There was also a downtrend and significant volume cluster created in here. Those four. You can immediately tell if you look at the chart that there were massive volumes created there. Probably some algorithm was selling aggressively in this place. So what you want to do is wait for a pullback. You want to see at least one whole candle below this area. In here we have 3 of them, 3 5-minute candles. Then there's the pullback, and from the heaviest volume peak, or from this place, from the place where the volume cluster started, you enter a short. Now another example is on the futures on the euro. This is a 30-minute chart. In this case there was a strong uptrend, and there were heavy volumes in here in those 3 candles in this area, or mostly actually just in here, the middle one. Not really in this one, but in the middle one, and then also in here, but mostly in the middle candle right there. Heaviest volume peak is in here. So you wait for pullback, you enter your long from there. Now you can wait for confirmation when the price hits this level, but you don't need to. I'll be talking about the confirmations on the order flow confirmations later in this video course. So you can use the confirmations to confirm the long from there, but you can also trade this without the confirmation. So you can just enter your long from here at first touch. All right. Now another example. There was a very strong sell-off, again on the euro, futures on the euro, and this is also a 30-minute chart, so there was this sell-off. Then the price retraced back to this area again, and this was the significant volume cluster. And this is where the price reacted and went again into a sell-off. Now, if I had a 5-minute chart, it would probably be easier to read than a 30-minute chart, but I hope that you're able to see that too. Now, when there is a strong downtrend, like in here, I usually prefer to trade shorts from the heavy volume clusters, like in here. I'm not really into taking longs against such a significant downtrend, all right? But if you look, for example, in here, there were also heavy volume cluster right there. And there was also a nice reaction, around 15 pip reaction, which is more than enough for intraday trading, all right? So this would be another viable trade, but it would be risky because it would go against strong downtrend. So next example is an example on the futures on the Australian dollar. Again, it is a 30-minute chart. There was a strong uptrend, and within this uptrend there was this heavy volume area. Now the beginning of the heavy volume area was in here, and this is exactly where the price reacted, as you can see right there. Alright, so when you see this volume cluster, you just wait for pullback. When the price gets there again, you press long. Alright. Now the last example of this volume cluster setup is on the ES, which is futures for Standard & Poor's index. And currently this index is very volatile. So you can see, if you look at the chart, the volatility is just crazy, but there was a really significant volume cluster area in here. Now, in cases like this, it's sometimes a bit hard to tell exactly where the area is, where the significant volume cluster is, where it starts and where it ends. So usually it's just best to watch the whole area, this whole support area, and wait for some confirmation when the price hits this area. As you can see in here, the price reacted to the beginning of the thickest volume cluster in here. But it could have as well reacted somewhere in here or somewhere in here. So that's why you want to see some confirmation to tell you that buyers are jumping in and you want to enter along. Alright, but don't worry about it now. You will learn about the confirmations later. But again, as I said, you can trade this also without confirmations. The worst case scenario is that you'll just miss a trade. Alright, but I guess that it's not so bad. Now, the other way how you can trade this setup is when there is a rejection. Now, what rejection means is that the price goes one way, then it turns and suddenly goes the other way. In this example, the lower prices got rejected. That's why it's called rejection. Because lower prices got rejected, the buyers rejected lower prices and pushed aggressively the price upwards. They completely turned the price development. The strategy in this case is very similar as in the previous case. Again, you use the volume settings, and those volume clusters which you are now familiar with show support and resistances. And what you're looking for is a volume cluster which is created within a rejection. So you are not interested in volume clusters created, for example, in here or in here or in here, but you are interested only in significant volume clusters within a rejection. So as I said, this is the rejection, and in this case, the significant volume cluster is in here, those three. That's a strong support. Now, what you want to see is the price moving away from it, as in the previous case. So there is the rejection. This is the support. This zone is the support. And you want to see the price moving away from it, like in here, whole candles above this support, at least one whole candle above it. You need to see the strong rejection, right? Now, when the price makes a pullback to this area again, to this support area, you want to go long, you want to enter a trade which will be in the direction of this rejection. So in this case, along from there, all right? And again, you can wait for some order flow confirmation, but you can also just press the long the moment the price touches this area. Both those ways are okay. All right, so that's the rejection. Let me now show you some examples. Now you always want to first look for a rejection like this. This is a strong rejection of lower prices, which means you will be looking for longs. And only after you see the strong rejection, you will start looking for significant volume clusters within the rejection. All right, in here, pretty massive volumes right there, those two. You can tell if you look at the shades, they are way darker than the rest. And also if you look at the numbers, 800 contracts in here, 600 contracts, and all the other numbers in the candle are way lower, around twice or 3 times lower than that. All right, so this is the significant volume cluster. This is your support. There is the rejection. The price goes above the support, and when it makes a pullback and hits the level, hits this support, you go long. Now another example, this is a 5-minute chart on the Euro futures, 5-minute chart. Rejection of higher prices, and within this rejection there is this significant volume cluster with heaviest volume peak in here. So if I draw a line, then this is the level you want to go short from, right? So there is the pullback, and when the price hits this level, you go short from there. Now this is also a 5-minute chart on the Euro. There was a significant rejection of lower prices in here. I had to zoom it out a bit because the reaction came the other day, so it wasn't that soon. This was the significant volume cluster, those volumes right there. You can also identify the support or the volume cluster a little bit bigger, maybe like this. But the heaviest volumes are in here, alright? So let's mark this area, and this is where the price turned. This is what you want to see, alright? Reaction to the heavy volume cluster created within the rejection. Now another one is on the ES. As I said, currently when I'm doing those videos, the ES is very volatile, and during the coronavirus crisis, so the ES is acting a bit crazy. So that's why the volatility is that big, but still those setups are viable to trade. This is a strong rejection of lower prices, and this is significant volume cluster within the rejection. So this is the support zone. You wait until the price makes a pullback to this zone again, and from this zone you enter along. Either you enter without a confirmation, I would enter without a confirmation from this heavy volume node, from this place, or you can wait for some sort of confirmation from this area, alright? Now the last one, the last example is on the euro dollar. This is a 30-minute chart, strong rejection of higher prices in here, very nicely visible volume cluster created in here within the rejection. So what you do is you wait for the pullback until the price reaches this area again. Now I had to use two charts because two levels were like 3 days apart, so it's just better visible to do it like this. So after like 2 or 3 days, the price returned back to this area, and this was the reaction to this significant volume cluster. Alright, as you can see, the euro is also pretty volatile. That's just what the coronavirus crisis did to the markets. Alright, so that's for the last example. Those are the volume clusters, one of my favorite order flow trading strategies. Remember, you don't need to look at the numbers of the order flow, you just want to look at the shades of the order flow. If it's hard for you to see the shades, you can go to order flow settings and set it to a little bit darker color than the gray color, or you can also change the opacity. Currently I have the opacity at 200, but you can change it, for example, to 250. And when you do that, you'll add a little bit more contrast to the charts, and those volume clusters will be a bit better visible. But what you can see on your screen is the settings which I use and which are okay for me to analyze the market with the order flow. Alright, so anyways, that's for this video. Thanks for watching, and I'll see you in the next one.